Jeff, there is so many conversations going around at Oakwood Finance with our clients as to what the future will hold for property and how to go about it. And obviously we can provide finance solutions, but we don't really know what a buyer's agent knows and what the property market will do. So what's your insight there?
Yeah, so we're having a lot of conversations as you are dealing with home buyers and investors really not sure whether properties are going to go up or down in southeast Queensland. But I take it back to the real facts. So the real numbers are we've still got huge immigration coming to southeast Queensland. We're building 30% less homes than we were 5 years ago. So that really means that the demand is going to be very strong, and the experts are saying rents are probably going to increase, Dylan.
So Jeff, if rent's going up, what does that mean for the first time buyer or just someone trying to get into the housing market?
Well, unfortunately, it's only going to make it tougher, Dylan. So our role is to help our clients, home buyers and investors create wealth in real estate. So it just means we need to find solutions for our buyers.
Right. So rent just keeps going up and up, and it can go up above $800 per week for the standard home. So some people feel like that this might be a bit of a waste of money. So what's your solution to that problem?
Yeah, absolutely, Dylan. Rents are only going up with these changes, probably keep going up. And unfortunately, you're never going to see that money again. So we encourage everyone to get on the property ladder. And we've got solutions to help home buyers and investors create wealth in real estate in this current market.
So Jeff, who do you think would benefit the most from coming to maybe a future investor event?
Well, basically anyone that's looking to create wealth in real estate, whether you're on the rental ladder and you're looking for help to get onto your first property, or whether you've got property with lazy equity that you want to build wealth through an investment property.
Makes sense.
So Dylan, I know there's a lot of complexities with going to a bank and trying to get a loan. It's an absolute nightmare. They're continuously changing their policies. What's the solution as a finance specialist?
Yeah, well, as a broker, we have many banks that we can go through, and it's great because we can sort of work with each one of them differently. And when a client comes, their situation might be slightly different, and so a nuance from a bank suits them, and we're the ones that know that. And so we do end up getting either more equity out of a property to then come into a next purchase with a policy that suits them, or it might be that their ABN hasn't been registered for too long, or there isn't maybe a certain thing in their self-employed that could be added back, or there might be something like that ends up benefiting the borrowing capacity by a lot of money. Some of that could include credit cards being closed and or liabilities being paid off. But if you don't know the bank's policies, how do you know how to increase that borrowing capacity by maybe alleviating or discussing this direct? So we're the specialists, and we will try to find a way to help you, and we can communicate many methods or solutions to getting to your goals.
Yeah, in fact, we were discussing a case just earlier this afternoon about that exact reason. Can you just quote that? Because I think that was a really interesting story or facts to hear.
Yeah, so the bank was saying that their borrowing capacity was shortened because of serviceability. So as a broker, we asked if they could provide the serviceability assessment and you know what was included as a liability.
Right.
We found out that there was a tax debt that was very minimal. It only had 1 or 2 repayments left, and they were including that full repayment into the serviceability, which then meant that we could provide a solution of closing the liability and then not having that to reduce the borrowing capacity because it's included as a liability. Stuff like this people wouldn't know, especially if it's in the tax docs and not necessarily an easy rememberable liability like a credit card. Everyone remembers the credit card, but they don't remember the $400 to $700 tax liability that could have been paid off easily, right?
So what was the tax debt, and how much did it change the borrowing capacity by?
It changed the borrowing capacity by over $50,000, and it was $700.
Wow, that is nuts.
That's nuts. So it's great to have someone who can understand where the assessment is affected by certain things, and that is important for everyone. And even then, which banks have different buffers and what they assess on, being interest-only rates all the way through to principal and interest plus a 3% buffer assessment rate. That's a big difference. So we can give guidance on that stuff.
Fantastic. So that all our attendees will learn that on the night.
They will. There is so much confusion and there's so much unanswered questions. So we want to bring some facts, some methods and frameworks that you can apply to the real life situation of the Australians looking to try to invest. So please click the link, see you at the event, and we're looking forward to answering all these questions for you.
Great, see you there.
you.